Okay, it's preparing to live stream at the moment. Hang on a second here. There we go. Okay. No, I didn't. We're going live here. This is being live streamed right now, actually. So,
Right on. Okay.
okay.
Well, thanks for joining us to the Beat the Odds podcast. I think Trevor, this was our mission that we're going to keep this up even if I'm not here.
I
Not
know.
I'm not in Edmonton, right?
Not. I don't think so. I've never seen that view in Edmonton. Could be the River Valley, maybe. But tell us what's behind
Oh,
there. Behind you
this is the
there.
north side of Edmonton. For those of you who haven't been out to the north side of it, this is what it looks like.
The
People on the
far.
south side are a little scared of it, but it looks exactly like this. It's
Yeah.
40
Just
degrees, sunny with a view. Yeah,
perfect. So
it's
tell
but
everybody where you are.
I'm in Dubai at the Atlantis the Royale, kind of at the end of the earth, the end of the Palm Jumeirah, so I like to call it. So for all the flat earthers out there, if you want to see the end, it's right at the end of the earth. So
Perfect.
you kind of get that sense when you're driving at the end of it. So but yeah, I mean this is the Beat the Odds podcast where we're trying to help Canadians beat the odds at business and wealth, and so we have to understand that it's not just our little country out there; it's a big world out there. So
Yeah.
yeah, so we
A-
got
And hopefully everyone at some point will, be able to build a business or build some wealth so that they can do these types of things. Go to Dubai, go to Italy, go to Europe, go other places just to experience what life is like outside of Canada.
yeah. I think and it's kind of time too. We got some content coming up today. We're gonna come, we're talking about employment or unemployment. Maybe it would be the right word after I saw the announcement today. So yeah, and also we got some data on U.S. debt and G7 debt versus BRICS debt, including the United Arab Emirates here. So I think we got
All right.
a whole bunch of stuff to cover here, Charles.
Okay, let me
Let's
share the screen and let's dig into it.
let's drill right into it.
Okay. Believe I want to share this screen here and okay, I think we're there.
Right
So
on.
what post did you want me to
Let's
start
walk
with?
down to our market update. So the market update there, right at the beginning of the month, and we'll try to get some of the comments out too. So like the questions people ask on Instagram, whether they're useful or not useful, we'll try to address them either way. So and you can kind of see it was a red month. The
Yeah, I see that.
TSX, gold, housing, Bitcoin, and I mean that's kind of what happens when the money supply is contracting, and you can see the sentiment out there. There's a lot of fear, right? And one of my goals of this podcast is to kind of talk people off the ledge, because when you zoom out, it's still very clear what's going to happen here. The money supply is going to keep increasing, and the value of desirable assets is going to keep going up. But it won't happen every single month. It might not even happen every year. Zoom out 10 years, that's likely going to be your outcome, right? And I know some people there, now they're looking back at the housing market, for example, in the Greater Toronto area, looking back to the 90s, and they saw kind of a 10-year period of darkness. But the amount of debt in the economy right now is vastly different, and especially government debt. And the only way for them to service that debt is to increase the money supply, which drives up the price of assets. The debt to GDP that we had 30 years ago, it is no more. So the expectation that desirable asset prices are going to be flat, it's like, that's not the likely outcome here, right? And here's you can see Bitcoin is a big mover, and
Hmm.
it's the one where this is an unnatural asset for people to hold, because we're taught to think that volatility is risk and risk is volatility, but that's not actually the case. And the problem is most people are just not cut out to hold that asset, even though it is very likely to be the best performing asset in the next 10 years too. But if you can't handle it, if you can't handle the volatility, I mean, this is what you get. You get the paper hands selling to the diamond hands, right? And the goal is not to.
I love that.
And everyone thinks that they're going to time this thing. It's like you're not going to time this thing. If I could time the market, I could buy the hotel, not just rent a room at the hotel, right? But the people, they want to time the market. It's just that's not just how it works. And I think maybe one interesting thing, Trevor, as I'm monitoring this, like I got on my WhatsApp, someone got my WhatsApp number, and I'm invited into one of these crypto scams, and I'm just watching how this whole thing unfolds, and I see the messages going back and forth about the guru is supposed to give them their tip that's going to go up by 80% in the next next 24 hours or something, and I'm just watching, and they're just relentless, right? And I can't quite figure it out. It's like I think there's about 30 people in it or something, and I'm fairly certain that at least 25 of them are part of the scam. And I'm just trying to figure out, like, how many people are the targets in this, right? And I'm just watching, like, how vague and over the top it is. It's like that's not real life. It's like what you're seeing on the screen here. That's real life. These are the assets that I like to buy. I have no idea if they're going up or down next month. It's like that's not why I bought them. It's like I have an idea of where they're going in the next 10 years. That's why I'm buying them, right? And it's no different when housing too. It's no different than housing. So,
And there's the real money, like this right here, this beautiful gold coin, and people feel more comfortable with this. But when it comes to crypto, that scenario you're playing out there kind of reminds me of a scene in the movies. They're playing poker, and it says if you're sitting down and playing poker and you don't know who the mark is, you're the mark.
Yeah.
Okay, so what do we want to look at next?
Well, let's see. We've got the comments. I mean, we got someone's there still a fan of Bitcoin.
Yeah.
What else we got? That's it for that one, right?
That's it. Yeah.
Seems like they're kind of on board. We had our maybe our one complainer. They've kind of they've let up there, right? They wanted us to include total stock returns, but you can't. I keep telling people it's unfair to include total stock returns, including dividends, against price appreciation in houses without the rental income on the houses. It's like you need to identify those separately, right? And so we'll continue to do so because those of us who attend the boot camp and know how we can leverage, you can leverage houses and you can leverage stocks. The price appreciation matters. The dividends have already paid out, so that's a different points there. So, okay, let's go on to the next one.
Where did you want to go?
Canadian dollar. Yeah, the very next post there. The next still. We'll do the stills. We will do the stills. And so, I mean, interesting that Canadian dollar is held back. We have the quarter point reduction, Bank of Canada, and the U.S. Federal Reserve has not moved yet. But Canadian dollar is holding, pretty steady at 73 cents on the dollar. So maybe that was interesting to tease out because none of us were quite sure how that would transpire. Maybe we got a little bit of help with the price of oil coming up recently at the same time too, and that maybe kept it hammered in there at 73 cents on the dollar. But you know what, Trevor? I actually haven't seen the price of the dollar since the employment update. Maybe just pull it up just right now. Just do a search, CAD versus USD, and I'm just wondering if just that's fine. Chart is fine. Interesting. It's still holding pat, and I think there's a couple things happening there because the Canadian, we're going to see coming up here that the Canadian jobs number was not very good, which suggests more cuts from the Bank of Canada in the future, which suggests a lower dollar value. But I think at the same time, I think the U.S. had some kind of underwhelming employment results too, with full-time jobs decreasing. So, and that's always the metric that I recommend people. One of the key metrics to focus on is full-time jobs. So, okay, so we got that one. out of the way there. Any other comments on that one that we should go through? Take me back to 2014. Oh man, yeah,
Right?
we all like my plane tickets would be so much quicker if we could take us back to 2014. When another one they're saying July 2024, it's now 68 cents on the dollar. It's like, well, whoever you
Ah,
converted that currency towards, it's like I would not I would not use them again because you got ripped off if you only got 68 cents on the dollar. That's not the rate. So yeah. Anything else on there on that?
that's all the comments that we've got. You've got a comment here. Remember, much of the information you receive is in USD. It's important for Canadians to understand asset prices in terms of Canadian dollars.
Oh man, yeah. It's like we have to understand our home currency, and so not just our home currency, our home tax. Oh my goodness. If I had a dollar for every time someone brought me a US tax strategy and expected that's going to work for a Canadian. But and we have to understand as Canadians, it's like, this is the goal to help you beat the odds of money and wealth in Canada. That's the goal. So let's understand where Canadian dollars holding up. So
All right, where to next? You want to do this?
oh, oh yeah, let's do it.
Okay, let's do
Let's
it.
do it. I mean, this one had, a little bit more activity than some of our other ones. This is kind of the hot button. It's debt to GDP. And you can see, Japan there is kind of the canary in the coal mine. I like to I like to look at, right? Debt to GDP of over 200%. And so that's going to be interesting. Like, do I think the US could ever get there? It's like, nah, I think that would be difficult for the US to get there. The Japanese have, kind of a different, they have a different manufacturing base. They have a lot of, manufacturing as opposed to, what the US has per capita. And also they actually have a high savings rate and, something called the carry trade. So, able to borrow in a lower currency, lend in a higher one. But that's always interesting to check Japan. But just as a whole, we're looking at Japan, well, Italy at 137%, US at 122%. And we're gonna have a chart coming up and show people the historical significance of 122%. We have France at 111%, Canada at 107%, UK, okay, just under 100%. We have the EU, 89%, and Germany at 64%. And Germany, for those of you who don't know, dumping a bunch of Bitcoin, last couple days. So of course they're gonna dump the hard money and print the fake money. And, hopefully, I don't think that's gonna work out so well for them. But I saw some German politicians there were kind of interested on, they don't think their government should be doing that either. But governments love to think about the short term because they just, in most of these countries, they need to win a couple of elections just to get a government pension, right? But then we go into the BRICS countries, and the BRICS, for those of you who don't know, Brazil, Russia, India, China, South Africa, but more countries have joined on. India has the top debt to GDP of these countries at 87%. China just at 79%, second largest country, and Brazil 76%, South Africa 72%, the UAE 40%. And people really need to pay attention. Like, there's a reason why I'm here in the UAE. It's there's a reason why I've spent time here, is because you can't argue with success. And so a lot of people, I think they have some preconceived notions, and they look at different countries and they're intrinsically scared of countries, right? I kind of liken it to the TDS, the Trump derangement syndrome, where it's just, it does not matter what Trump says to some people. He can say the sun comes, going to come up in the morning and it's going to go down at night, and people will argue with him just because it's Trump. It's kind of the same thing for some of these countries, right? Where people can, they cannot admit that something might be better in a different country other than their own.
Yeah, let's get into that a little bit. I mean, you made a controversial statement to me. I think we started talking about this maybe a year ago. I think it was after your first trip to the UAE, to Dubai there, and you were saying something about the royal family and having basically like your attitude towards business. It's a benevolent dictatorship but it works. Maybe dig into that a little bit.
Yeah, I mean, we're always taught that democracy is the best. But we have to understand where democracy has gone at this point. I think at this point, we look at the U.S. as the world's leading superpower, but the U.S. federal government is the largest organization that has ever existed in the history of mankind, both in terms of headcount and budget, and it's not even close. And so when you get that big of a bureaucracy, it's very difficult for elected officials to even create significant change, to even steer the ship. There's so many tentacles and moving parts that it's actually, pretty difficult for elected officials to, even if they campaign and win on a various platform to do as much as they think they're going to do, right? And it's very difficult to, whereas you get a monarchy or dictatorship, and the common misconception is that they're all evil. It's like that's not how it is in all of them. I mean, I can look around here. I mean, if anyone hasn't come to the UAE, it's going to be a very different, eye-opening experience. It's not going to be what you expect. You think that there's going to be a whole bunch of rules and restrictions, and you can't do certain things. It's like, I mean, it's a pretty open culture here. It's a very safe place to be, and all that aside, economically, I mean, the most millionaires have been moving to the UAE the last few years of any other place on earth, because they've been very good of how they've been able to attract businesses, attract capital. For those who own a business, you're going to start to understand that if you have roles that don't need to be customer facing, that can be done in a back office, you're going to start to understand that outsourcing might be a good idea to get an office in a different jurisdiction. But then what's going to happen is you're going to go to some of these jurisdictions, like in India or like the Philippines, and you're going to see what a bureaucratic nightmare, disorganized mess it's going to be, as opposed to, that's why a lot of companies will set up in the UAE, because you can actually recruit workers in, and you can create that back office that you're looking for, right? Look at all the top brands. It's like it's very difficult, by comparison, to bring a worker into Canada. The UAE is not necessarily the place you're going to come to recruit people, but it could be a place where you set up a business, and just how they look at housing in general. So most people think that the UAE is just making all their money off oil, which is statistically, mathematically incorrect. It's less than 5% of the revenue comes from oil. When you start to travel here and take some time here, so you start to realize that the UAE makes their money building real estate. And unlike what we're used to in Western countries, where the government builds the cheap, the housing, in the UAE, the government builds the premium housing, and the private developers, build the mid-tier and lower tier stuff, right? And so every time someone, buys a penthouse in one of these buildings, it's like they're effectively paying a tax, but they paid a tax that they agreed to pay. And so, interesting case study, right? Because you just tend to group it with maybe like an Iran, but an Iran is a completely different animal than the UAE. It's just a massively different animal, and so, but people, just they group all these countries the same without really looking into them. It's missed opportunities, because when you start to see things that work in different countries, it detracts from you being able to be competitive, because if you can't recognize, the things that work, you can't bring it out, right? You got Saudi Arabia at 27%, and Russia at 15%. Low debt to GDP is like
the devil, Putin,
yeah.
stooge.
Of course. I mean, who's he going to borrow from? Like, that's not. He probably would borrow more if he could, but
they cut him off. They completely cut him off. Of course, his debt to GDP is low.
Yeah, so it's we look at some of these, and it's important to kind of know this. And this is where I say any company with a BRICS, they're not transparent. Has anybody follow, for anybody who reads that, just follow the US government when they give their financial updates. And then every month they continually revise the updates over and over and over again. For anyone who thinks that only governments in the BRICS countries manipulate their countries, and all of the governments in the Western countries don't manipulate their numbers, like, come on, people, like, come on. It's like we're living in a world where the president of the United States, he has dementia. Anyone who's been watching, who's alive with the same brain, knows this guy has dementia. But if you said it before a week ago, it was incorrect but now that CNN has given everyone permission to actually talk about it, we can talk about this. But somehow, they're truthful on everything else. It's like, that's just not how it works. And so if you're believing nothing that's coming out of the BRICS countries and everything that comes out of the G7 countries, like, oh boy, that's not I don't think it's a healthy position if you're actually basing your financial decisions off of that. Right?
Yeah, let's see what other comments we have.
Drill into the replies there. Like I actually, replied to one of them, because the key thing is that, they actually think, okay, they're lying. Okay, let's take that a step further, because I think what they're implying there is they're lying and the BRICS debt is higher. But you have to think about that. That's a hypocritical statement when you say it, because who has the ability to borrow a lot of money? Is it idiots or sophisticated investors? Okay, it's not idiots. Idiots are not sitting around with billions of dollars in capital ready to deploy. That's not who has billions of dollars. Sophisticated individuals have billions of dollars. Sophisticated companies, sophisticated pension funds, sophisticated, sovereign wealth funds, sophisticated family offices, those who have billions of dollars in capital to deploy. So do you think that there's billions of dollars of unrecorded liabilities from pension funds who have bought Iranian sovereign debt? It's like, come on, people. Like, they're not running up to give these guys money. It's, you can't say that you don't believe the numbers, but then somehow there's a whole appetite of rich, affluent investors who are throwing money off at them, that they have off the books debt. It's like, that's not how it works, people. BlackRock is not calling up, he's not calling up Iran and saying, hey, let's do this one off the books. We're gonna park a few billy with you this week. It's like, that's just not how it's happening. And so will they lie with the numbers? Like, well, all governments lie. Like, that's it's in the nature of every politician.
You're kidding me. The government lies?
It's not realistic to expect that these BRICS countries have a whole bunch of off-the-books debt, because there's not an appetite for sophisticated investors who buy their bonds. So, you really just have to take that with a grain of salt, right? Could they be less reliable than G7 countries? I mean, they could. But I'll go to the UAE example. It's like, why would they be lying about their debt? They're running a surplus over here. They're not even running a debt. They're the only country on that list on both sides who's running a surplus, for example. So, why would they be lying? They could report 5% higher, 10% higher. It wouldn't affect anything. I don't think it would affect much of what is going on here. Usually, when do you lie? It's like, usually when your back's up against the wall. That's usually when you lie, right? That's the more likely outcome there. And so, we just have to understand. It's like, I think we saw some infrastructure, and people are overcomplicating. I saw this in one of the comments. It's like, well, you can't just look at debt to GDP alone. It's like, yeah, you can, people. You really can just look at debt to GDP alone. It's like, it's actually not that complicated. It's like, that's what we've been, the wool's been pulled over everyone's eyes, and people are, thinking that it's too complicated for the average person to figure out. It's like, no, it's not. Those are really bad numbers on the left side of the page. And, we need to stop putting up with it, really, is what it is. It's like, and you have to look at it, I think we're all guilty of it at some point. It's just, enough is enough. It's like, no more spending, no more debt. It's like not a dollar more. It's like, if a client came into me with these sort of debt ratios, it would just be stop now, immediately. In fact, a lot of clients, if they came in with these sort of debt ratios, would be talking about bankruptcy because they don't have the ability to print their own currency. And so these are extraordinarily important numbers. And tying it back to how does this help Canadians build wealth? It's like, you have to actually know these numbers, because the only way for these governments to service the debt is to inflate it away. Okay? If you're the US and you have $35 trillion in debt, it's like, well, it's difficult to pay the interest on that if your GDP is 27 trillion. What you need to do is pump that economy full of money. And so you have an economy of 40 trillion, not because anyone's more productive, just because everything costs more. And if your economy is at 40 trillion, it's going to be easier to raise tax revenue. And that's the play, people. People have to understand that that's the play. That's the long-term play. And it's going to overcome any short-term barriers. We're looking at the days on market in the housing market in the GTA. It's like, come on, that's like we're looking right here. You need to look way out onto the pond there and figure out, what's happening. It's, the governments are going to have to print more money, whether it's next month or next year or in the next couple of years. There's only one play and one play. So know these numbers, learn these numbers, understand those numbers. And I tell people, watch Japan, because they're the canary in the coal mine. Okay, that's not much heard.
What's next?
Oh. Okay, this deficit is the one. Yeah, because some people, they hear 122% debt to GDP. When was the last time there was 122% debt to GDP? World War II, people. It's like there's no war happening here. The spending, this is how historically bad the spending is. There's no war happening, but they're spending like they're in a war. And it's a little tough to read that red line below, which is the deficit to GDP. And ideally, you'd like to see that slightly above the black line, and countries building a sovereign wealth fund. That's how any company or any individual should be treating their balance sheet. They should be adding to it over time and through generations. But what are they doing is that whenever you see below that black line, it's like, they're actually adding to the debt. It's going up. And people have to understand how historically absurd that number is at 122%. It's like you're going all the way back to World War II, where they're, as a matter of life and death, they're building tanks and bombs and guns and ammo. But now there's no COVID. There's no war, at least no global war, no world war, but they're still spending as if there is. And this is the world's reserve currency. It's like, even though this shows for Canadians, we have to understand that the world moves in lockstep with the US at this point. Whether we like it or not, it still moves in lockstep with the US. And a 7% deficit to GDP is insane. It's completely insane. And it's to the point where they can't cut 7% out of their budget without just obliterating the economy. And so their only option here is to print money, to inflate, the size of the economy and proportionally reduce the size of the debt. And that's the way they're going to service it. So you have to hold on to your desirable assets while looking at that chart. It's like, because that's the end game that people have to understand. So,
all right, what's the next chart here?
Well, the next chart's the employment update. We just got this one this morning, and I was actually a little bit surprised. 6.4%. So that's a pretty meaningful tick up by 0.2%. And the full-time jobs, And I tell people, it's like, look at jobs, because part-time jobs are a little bit, they can be a little bit misleading to look at part-time jobs, because when you look at part-time jobs, that's people getting extra jobs just to pay bills. But when you start to get full-time jobs, it's like, when you add a full-time job, that's a real thing. If you add a part-time job, that might be someone getting a second or third job just because, just because they're trying to make ends meet, not because everything's going well. And so I really like looking at the metric of full-time jobs. And then we got to the median wage at 29.81. That's a big step backwards. That's our, it's, let's call it the only decline. I think there was a decline there. I can't quite read all the numbers on the screen there, Trevor, but I think there was a decline there of 1 cent previously.
Yeah, in March.
Throughout the year. Yeah, in March, which let's call that, statistically, or let's call it a rounding error, right? But now I believe they're 19 cents off the top, right?
That's
so
right.
At 29.81. So that's a real big move back. And we talked about last time, it's like when the Bank of Canada actually adjusted the rates. Was it political? Was it necessary? I didn't think it was, I wouldn't have done it. And I know that's an unpopular opinion. And it's like, I would have done it, even though it might be better for my investments, I would have done it because I'm more worried about long-term inflation. And people are worried about overcorrecting. It's like, if you would have asked me 10 years ago, I would say, yeah, I'd be worried about overcorrecting. But now that, we've lived through the great financial crisis and we lived through COVID, we know that you can shut an entire economy down and lock people in their houses and pump it full of money and prevent deflation. So I think we've all dramatically throughout the years underestimated the speed that quantitative easing can have and how effective it is in the short term. So if these numbers started to accelerate, it's like, they're not going to accelerate to any sort of category that was equivalent to shutting the economy down and locking productive workers in their houses. So I'm not worried about overcorrecting because we understand how powerful the nuclear weapons that the central bank has when they want to reduce rates and when they want to inject capital through the system through quantitative easing. It works extraordinarily quickly. And so this will be the first month where, you start to see anything below 6% in unemployment. It's technically that's full employment. And so for all intents and purposes, it's zero. Different textbooks will tell you different things, but, I'll use 6. Okay. In the modern world, I think that's that's a good barometer. And before there, we're hovering around 6.1, 6.2. So it's like, it's almost full employment. Now we've gone up by a full 0.2%. It's been, pretty consistent, but also, and the full-time jobs are planted. They've just been planted at 16,700,000 for several months now. And as portion, we know our population is still increasing through immigration and increasing quite rapidly in some, areas of the country. So when you start to see median wage now drop, if I'm the central bank, it's like, I would actually want to see if that wage drop is actually sustainable, because sometimes you can get strange numbers that happen, especially seasonally. And so I'd really want to understand that one. But the fact that it happens in June, that wage, that decrease in median wage was more than what I would have guessed. And so I want to see that happen again. And it's like, if I saw that happen again, it's like, I'd be ratcheting. If I was the Bank of Canada, good old Tiff, I'd be ratcheting it down a quarter point every other meeting, as long as that trend continued. But, I'd want to see one more of that. I want to see if that median hourly wage, is that an anomaly or is that a true trend? Because these are all monthly numbers and people, they jump all over. There's a lot of funny things can happen in a month, right? Just with data collection. So, but that's an eye opener, right at the bottom right at the screen there, that 29.81, and see what happens next time. If that came down, it's like I think that would have been an actual reason to cut by a quarter point. But
Gotcha.
that's kind of where we are today, Trevor. So what are your thoughts on that?
Well, I'm just going to stop the screen share here. So, I guess the takeaway for people is to take their fake money, their 20, take your 20 billion Zimbabwe dollars and exchange it for hard assets, because from the discussion today, all the hard asset prices are going to be going up. It's not a matter of if they go up, it's when, because they are going to be going up. So real estate, gold, Bitcoin, dividend paying stocks, all of these things you should be putting into your portfolio, or at least getting started, as Josh spoke about last time we were together, because they're going to be going up. And to not look month to month, I recently helped my dad get started doing some personal investing using a Wealthsimple account. And we bought a Bitcoin ETF, and then he's coming to me every week. Look, I still haven't made money on this ETF. I'm like, Dad, just hang on, just hang on. Let's see what happens in a year or 2 years or 5 years. The goal isn't to try and you're not looking at your account every day to see if you've made a dollar or not, because it'll make you crazy. It's to hang on to that for as long as possible and see the gains, and then reap the rewards of the dividends afterwards. What are your thoughts, Josh?
Yeah, I mean, the trade we know we're going to lose is, like, I don't think the sovereign bonds, whether you're Canada or the US or UK, it's like I don't think they're going to keep up with real inflation. Could I be wrong in the short term? Absolutely. In fact, I will be wrong in the short term over some short periods of time. But in the long term, it's like no way. It's like I know they're Zimbabwe dollars. They're all Zimbabwe dollars, and I say that like I don't expect any of them to turn into Zimbabwe, but I just know that they're pieces of paper. At the end of the day, the goal is to trade those pieces of paper for desirable assets. Okay? But the goal is also not to be overly exuberant either. And so some of our recommendations are like they're a little bit boring, because when the housing market is pumping or Bitcoin is pumping, it's like I'm the last guy who's going to be telling you to overextend yourself too. And so I can say this because clients of ours, myself, it's like we build the war chest. It's like you have to have good liquidity numbers. It's like you shouldn't actually care if the housing market does go down 20%, which I don't think it will, but if it does, it's like that shouldn't cause you to get rid of your positions. If it does, it's like that probably means you shouldn't have bought in the first place, right? And we're seeing this, and I can just see the fear all the time. It's like that's what it's intended to do. The fear is intended to scare you out of your desirable assets and make sure that you can dump it onto the market for the people. That's why the rich continue to get richer, and one of the reasons why the rich continue to get richer and the poor don't is because the rich people aren't dumping their assets right now. Like they're not dumping their assets. And the goal is not to try to time the market, because it's impossible to time the market. Okay. What you have to do is buy quality assets at fair prices. Okay. I mean, I saw one recently, I saw a post recently, and they're comparing rent to the average mortgage price. And everyone's like, oh my goodness, that means I should rent because the average mortgage price is 25% or 50% higher than rents. Okay. But once you buy your house, that mortgage, that guy is for all intents and purposes, I don't want to say it's locked in. We're not in the US where you have 30-year mortgages. They float based on interest rates. But in reality, it's probably actually going down in Canada, because you're probably buying towards the upper end of the interest band. Okay. And so likely when you renew, if you were to buy here, if you renew in 5 years, it's like the more likely scenarios you're renewing at a lower rate. Okay, great. But then you have to understand is like, what about your rent? Do you think your rent is going to be consistent? It's like that rent, realistically, we've seen housing prices expand at 6% a year in this country. And so that means your rent is doubling every 12 years. And so, whereas your mortgage is like, let's call it even playing flat. Let's say we're not going to get any reprieve on interest rates. That
Sure.
means, so it's going to stay flat. Your rental price is your mortgage is going to stay flat for 25 years, and then it's going to go to zero. Meanwhile, your rental price is going to double every 12 years, forever. And if you're a 30-year-old, like, I got news for you. It's like it's a long ways between 30 and 90, which, you know, the Office of Financial Superintendent says when we're actually, you know, when the average life expectancy is going to be for a 30-year-old these days. Okay, so you know, that's 5 doubling periods. It's like that mortgage is going to look pretty darn good, but like, people are here, right? They're always making financial decisions here. It's like I buy an asset. The test that I pass it through now, it's like when I buy an asset, it's like, is this an asset that I would be willing to hold for 100 years? That's the question I ask myself every single time if I'm going to buy an asset. It's like, is this an asset I'd be willing to hold for 100 years? Now, I don't think I haven't found the secret of you know, everlasting life or anything like that. But I just assume that I'm going to have assets at the end. I'm going to pass it down to my kids, and they're going to try to pass it down to their kids. And so, why would I buy them a crappy asset that they can't do that with?
Yeah, that's right.
Especially for those of us who actually understand how taxation works, and that there is the ability to pass intergenerational wealth, you know, tax-free, if not at least very tax efficiently. But it becomes extraordinarily hard if you have assets that you need to buy and sell. It's very, very difficult to do if you're always entering and exiting positions. And so even if you could get a slightly better rate of return, which I don't think there is any evidence to suggest that people will, but even if you could, you'd have to get a much better rate of return than the average, because you have to overcome the tax burden if you continually have to trigger capital gains. And so the goal is, people, it's like you need to steady the course. And when you see these pullbacks and these fear in the market, it's like, that's when you should buy things. You know, you need to be greedy when others are fearful, and fearful when others are greedy, right?
That's right.
I think we're entering into a period that could be very fearful, especially with what's happening in the U.S. That's a complete disaster, because for those of you watch that debate, it's like the big takeaways are, my takeaway, which is totally different than everyone else's takeaway. It's they have $35 trillion in debt, and neither have any clue how they're going to solve it. And even the third guy on the outside, at least he talked about it. He brought it up, but he doesn't have a clue how he's going to solve it. He's going to grow his way out of it. It's like, yeah, you're going to grow, the largest economy in the world beyond 7% a year over year, to grow your way out of it. You're not growing your way out of that. Like, there's no choice. You're going to inflate your way out of it. It's the only way. It's the only mathematical way out of that. And so, hopefully, this isn't the clickbaity advice. Because if I wanted the clickbaity advice, I could just tell everyone that the housing market is crashing and just look at the year-over-year comparisons. Like, but man, I don't believe that. I'm not selling any of my houses. Like, I'm not selling any of my real estate. So the question I would ask all these people who post that fear porn, online for clicks and views and responses, is like, hey, have you sold your house yet? I want to see them exit all of their housing positions, right? I want to see them sell their principal residence. They really believe the sky was falling. It's like, why haven't you sold it all? It's like, because you don't think you can time it, right? And ultimately, you think it's going to go back up, right? Maybe they don't understand with the same conviction as I do, where I just think it's all Zimbabwe dollars. So eventually, the price of assets go up. And so all I have to do is find assets that I'd be willing to hold for 100 years, buy them at a fair price, not at a crazy price. I understand how people can get extended if they bought their house in a bidding war. I tell people, it's like, well, I think you should get before you buy a house, get comparisons of every house that's sold in that neighborhood for the last 5 years. And if the realtor tells you that this deal is too hot to do that sort of due diligence, it's like, that's the market telling you shouldn't have bought it that time. If you didn't have time to do proper due diligence on a deal. So, don't get scared out there, people. If you want some more information, come to our boot camp. We still got some tickets left. It's in November. But I do believe, I believe there's about 75% of the tickets that are sold out now, and they will not be available in October. It's like they never are. Like the thing is sold out every, the last few boot camps, they're well over a month in advance. So, and the question is like, are you going to run one in my city? It's like, no, I'm not going to run one in your city because all the serious people will jump on a plane and fly to Edmonton to get it. Because there's no other reason to come to Edmonton. Other than you want to get a house at a fair price, and maybe you want to get a job, but no one's coming there for the scenery in the background, frankly. So hope that's helpful for everybody, and yeah, I hope to see you guys next week. We're going to drill a little bit more into the BRICS versus G7 because I'm not sure if people understand how deep that goes.
Yeah, no, that's awesome. Thanks so much, Josh. And continue having a great time while you're in the UAE and bring me back something pretty.
Right on. Thanks a lot.